Traders, welcome back to another price action trading lesson. The structure of the market right now started with bullish trend up. There is a tighter alternative with the break and new high, but even the wider channel has a break, close outside, double top, almost testing the new extreme, EMA flattened, and right now we are trading a consolidation. So as you can see right now, we have a spike up. Market is going sideways, and this is a congestion. This is a no trade zone. We are in the middle of the main trend range. EMA is in all the bars. So I'm not looking for any setup because this is a congestion, no trade zone. I'm not even fading the breakout because we are in the middle of the main trend range, and it is better to be patient and wait for price action to break out of this congestion. So I'm allowed to be looking for setups. Market is breaking lower. So when I'm watching this, I was expecting this support to hold the bottom of the trend range and possibly market reacting here and going higher. But notice what happened. Shortly after, market completely reversed all the way down to here. So this right here is changing the entire course of the market, and I have to adapt. We are retracing too far down. There's a break, new extreme formed, and right now the bias in this market transformed into bearish trend down. This is significant bearish push down, substantial. So your goal is to locate a channel. You never want to leave these candles on the chart without a pattern. So I was looking for a couple alternatives. If I'm gonna connect the first two swings at the top, copy it. Now we don't have any secondary swing right here to allow us identify the place where to put the trend channel line. I decided to respect it as overshoot because this seems a bit too wide, and a lot of times it is common that once you have such a big massive bar towards the end of the trend so far from the EMA, it can mean depletion. So I'm going to treat it as overshoot. Now if you're not sure, you definitely are going to observe this correction, and you're going to observe how EMA is going to react. So as you can see, you have a new low, first entry short. A market is completely breaking the EMA, and this makes things a little bit clear, easy to understand, because okay, this is truly acting as overshoot. Break, move to new extreme. So what I'm going to do, I'm going to market a correction. Now as you can see, I'm paying particular attention to the correction, not because I'm thinking about buying, because I want to identify the right place where I can sell, because the trend is down. And according to trendline rule, we expect new low to be tested. Okay, I'm not really comfortable selling above EMA because you don't know how many pushes higher there's going to be. But what you can do, you can measure it. This is the first leg. Market moves in pairs of two. Second leg. Okay, so depletion to the upside is likely. I would like to see push below EMA and a failed second entry long. Okay, we have a new high, first entry long. So I'm thinking about something like this: second entry long. Failing at the EMA, this would be failed second entry long because it aligns with the main context, which is bearish, and the trendline rule says we need to get new extreme. Okay, so can get a failed second entry long, and notice how far the price action is pushing without the failed second entry long. So this is concerning because you want to make sure you're going to take the failed second entry long as the part of this move is starting. Okay, you want to catch this move down. You don't want to take a failed second entry long after the significant leg down already formed. And the further down we go, the more I'm forced to treat failed second entry long as a first entry short only, and I want to see second entry short. Because we push so far down, this correction is getting longer and longer, and I have to treat this basically as a first entry short only. So this is how I'm managing the distance. Okay, we're back below EMA. We still need to get new extreme. This low is lower than this, so everything in price action falls in place. So I'm thinking about new low, first entry short, pullback, second entry short, and now we have second entry short. Actually, good setup that you're expecting because the downtrend still needs to get new low. We're below EMA, but we are not fully at the EMA and we're closing a little bit too far down. You know, we really wanted to see price action closer to the EMA for this to be a high probability setup. Way more aggressive. I didn't take it because it is just too far from the EMA, but as you can see, more aggressive trade I can consider, but truly it's not fully at the EMA, so it is better overall to be patient. The market needs to get new extreme. Okay, we have a new low, first entry short. We're breaking above EMA, so I'm going to redraw the short-term uptrend. Market is trending lower. Okay, another first entry short only, and market already created the new low according to trendline rule. So while we were expecting new extreme, I can see that I can identify possible consolidation, but you have to ask yourself, is this acting as a trend range? Remember, price action is telling you all the information you need, and you can predict the directional bias based on the structure that happened. We know the healthy trend range is supposed to have consistent swings up and up around through the EMA without imbalance. You can see this resistance doesn't have any secondary swing. There is empty room here, and there is definitely some form of bearish imbalance. And because this is not acting as a trend range, there is a chance there may be additional pattern down. So this is something you keep in back of your mind, because this is not acting as consolidation. But we have a break in extreme, so let's just be patient. Definitely you cannot go long just yet. What is the setup? In order for you to predict bullish reversal, you need a failed second entry short above EMA. We have a new low, first entry short. So this is a high low. I cannot go long on high low just yet. Okay, you would need to see failed second entry short reversal pattern, number one, if you are thinking about reversing the market. And number two, we established that this is not really acting as a trend range. Even you can see the support keeps moving lower and lower, so there is still some bearish bias. But once this high low fell so strongly, now it is obvious there is a secondary channel, spike and a channel, something like this. This is actually a similar structure that we had on Friday 2 weeks ago. We had also trend down, breaking extreme, and the structure didn't act as a trend range. It still had series of lower highs and low lows, and there was also a spike and a channel pattern. So you can see this is how you can predict spike and a channel pattern, because it is not acting as a trend range. Every single high and low is lower. So right now we're thinking about selling again. The bearish bias didn't finish. We've established a brand new trend down, and now we have lower high confirmation of what? New low, first entry short, pullback, second entry short. So this right here is lower high confirmation setup, but the problem is you have to use double bar entry here. Fortunately, the low of this bearish bar is close to the low of the previous bar. You know, this is decent setup. First decent setup for the day, lower high confirmation of second entry short. It confirmed this downtrend working lower. So it is not a horrible setup, because the low of this bar is very close to the low previous bar, and the stop is not big overall. It acts basically as one bar. It was good enough for a quick scalp, and market worked higher again, and now this was close to resemble some triple test. Actually, we can consider new high here, second bounce here, triple test. But you have to wonder why this push down didn't exceed the latest lowest low. This is just first entry short, and this is very tempting. I was really hoping you get a second entry short below EMA. You know, decent setup. Hopefully you understand what is happening, because this uptrend right now fully played out with the break and the new extreme. So you can definitely expect price action to go lower. Once again, a little bit more aggressive. The safer alternative is to get a second entry short, but uptrend played out with the break, move to a new extreme. One leg, market moves in pairs of two, so you need to train your eyes to look for these two-legged pullbacks. Once again, this downtrend needs to get new extreme, so can get a second entry short below EMA, something like this, but closer to the EMA. Okay, this is looking good. Can get a little pullback, and there was no pullback, and market already created new extreme. So this is unfortunate. Break a new extreme, nothing we can do. There was no second entry short part of trading. We have a second entry short now. Actually, we have a new low, so there's a count reset. Market keeps trending lower. We have a new low, short-term uptrend working higher. I'm going to be respecting the correction now. Now there's a decent entry that looks great visually, and even if you widen the channel just a little bit, but remember, this is not really double trap, because double trap needs to form after second entry short and a failed second entry short, because there was a lower high prior. This is just a first entry short only. It cannot be also failed second entry long, because the new high, first entry long, second entry long failure, but we already broke the high you're counting from. So mainly this is treated as first entry short only, and there was no break below the second entry short, so we're just waiting right now. Once again, flat EMA, we have small consolidation, so we cannot send to these lows. We're just going to be patient, let price action do its thing here. Okay, market is reversing all the way to the upside, so what I have to do, I have to adapt. I'm going to look at the start of this uptrend, and I'm going to connect the first two swings. Your best bet is to always start at the beginning of the move and try to connect the first two swings. That's how most of these channels are drawn, really. The first two swings allow you to draw the channel. The third swing will confirm it. As you can see here, we can make it just a little bit tighter so we can get the confirmation. You don't have to be perfect, but you have to be close. You have to understand there is some form of a channel. Now, we expect new extreme. So normally we expect second entry long, but we have a new high first entry long, second entry long. We have a below EMA second entry long, which we cannot take. And the downtrend didn't fully play that with the break and new extreme, so I can't take the second entry long below EMA. We're pushing above. So right now we're expecting high low confirmation setup. If there is something wrong with the second entry long, which in this case it is below EMA and the downtrend is in play, We want to see push above EMA is going to confirm the bullish momentum. And we want to see high-low confirmation setup. And now we have high-low confirmation setup of the second entry long right here, which would be great setup because it's closing above EMA. Uptrend is to get new extreme. Problem is this is signal bar is 5 points big. This is ridiculous. This is quite a big risk. You definitely need to use smaller limit order. I'm gonna mark it, but mainly as an educational example because 5 points risk is definitely significant. So you have to be careful here, but it looks great. New high potential second long arrow confirmation set. But when you train this live, you definitely need to wait for break above this bullish bar, drop your limit order, and your limit order was not filled. So no easy way to enter this trade. Break a new extreme, but you still need to understand that this is a good setup because next time you're going to observe a situation like this, it's going to form much better, or the volatility is going to be smaller, so the bar is not going to be that big. So you have a break a new extreme, so we're not going to widen the channel instantly. You have a break a new high, so we generally don't widen channels instantly. You want to see couple legs to new extreme that would make you question, hold on, why are we continuing to go higher even after breaking new extreme? So I'm just going to let price action do its thing. Are we pushing higher? No, we're going sideways, and more importantly, after breaking new high, we are right now trending lower. Okay, so I have to redraw a brand new downtrend working lower, something like this. And I'm playing basically the short-term trend line rule. I have no reason to right now look for long setups because uptrend played out to break new extreme. If I'm going to zoom back, you can see the main structure was more bearish. So it definitely makes sense for price action to keep trending lower. Uptrend played out quickly. So I'm thinking about second entry short at the EMA. Okay, every single time you're following these short-term channels and they reach a break and new extreme, you want to see the second entry short at the EMA. Price action keeps working lower like this, and there is no second entry short at the EMA. Market just completely dropped. So let's see what's gonna happen. Market is trending low, so we have a break, move to a new extreme, but we have so many smaller pushes to a new extreme. There's a chance that I can draw secondary spike and a channel, but this is mainly a bonus channel because this spike down was so strong and you're so far from the EMA. This is way too oversold and we need to have stronger pullback. I'm going to redraw the short-term uptrend working higher. Break. We don't have a new extreme now. We have a second entry short here, but we just had a very strong spike down. It is an inside bar. I don't think we can search just yet. Uptrend doesn't have fully new extreme. Remember, this was not healthy series of lower highs and lower lows. We just spiked down massively. We never truly confirmed the EMA. So I really don't think you can sell. You know, if you got tricked here and you sold here, I can see why. I can mark it, you know, if you just sold here, you know, there's a case to be made for this. The problem is this leg played out with the break new extreme. This secondary channel fits quite well, but it is a mainly secondary channel because this push down was so strong. There needs to be equilibrium and there was no strong correction phase, and you don't fully have new extreme. But if you took a chance here, you can make a case. Now this was close to be double trap, but it has to close fully below EMA, which it didn't. So we're not gonna sell just yet. Market keeps going higher. Now we have a final break, move to a new extreme. Price action is breaking below EMA. We want to see new low for the secondary spike and a channel. More importantly, first leg up, break, second leg up. And now we have a lower high confirmation setup. But problem is there is no strong bullish bar pullback. We like to see bullish bar prior to lower high. So you know that a lot of bulls, they bought the first entry long into EMA. Once we have bearish bar between, it is not as convincing as we would want. But because there's a two-legged pullback like this, uptrend played out, and you're quickly below EMA again, this is all the momentum bulls had. It is a decent lower high. It is actually, pardon me, new low, first entry short, pullback, second entry short like this, which makes it a little bit better. So decent second entry short right here. And the market is completely trending lower. So what I have to do, I'll look at a strong downtrend, tiny pullbacks. We can't even touch the EMA. So right now what I have to do, I have to identify a bigger pattern. Why do we continue to trend lower even when these short-term channels, they have breaks and new extremes? So I'm going to connect these two swings at the top, put it at the bottom. And the channel doesn't really fit that well off of these lows, but it fits quite well off of these highs. And if I'm going to zoom back strongly, I definitely don't like drawing this super broad channel just yet, because where do you put the bottom? This one is a little bit too broad. So it makes sense that there's a brand new downtrend established, because the bottom dropped so strongly here. There's a brand new bearish structure established. So you can see quite a decent downtrend, but it has a very odd structure. So it is definitely hard to find the right setup. Micro double bottom can reset. Uptrend played out with the break new high, push down. I'm going to reset the count here. So I'm respecting the correction. I'm going to redraw short-term uptrend working higher, something like this. You have a second entry short above EMA. I don't really want to sell, but I'm thinking about selling if you push below EMA. If you have a lower high above EMA, not interested. And now you have a failed second entry long, closing below EMA. Uptrend played out with the break new extreme. First entry long, pullback, second entry long, failure. We're closing below EMA. This is a decent hyper volatility setup. Failed second entry long, because look at the strength of this downtrend. Tiny pullbacks. We can't even touch the EMA. We finally corrected, and because we're closing below EMA, this is a failed second entry long. You're gonna wait for the trigger, place your stop loss one tick above the single bar. EMA is flattening, so as you can see, I'm trying to prepare already possible key levels, because we may right now be part of consolidation as a part of a trend. Okay, we're correcting, no real setup here. Okay, now we have a failed second entry long, but it feels too far down. Now we even have a lower high confirmation setup of the second entry short, new low, first entry short, pullback, second entry short. But problem is, the bar is quite big, 4.75 again. You know, had there been at least no tail at the bottom, so the bar is a little bit smaller and you have some room to scalp out. But as you can see, this is how price action works. Second entry short, confirmation, second entry short, lower high confirmation. You know, once again, another aggressive setup, not the cleanest setup. I really don't think we can take failed second entry long into these lows too far down, even though it worked. You know, you're selling quite close to these lows. Market is correcting. I'm going to redraw short-term trend working higher. Now, one thing you have to understand is you can't be thinking about buying, okay? We traded down so strongly. In fact, if I'm going to really zoom out, this was 100 points down move. So when the trend is this strong, there can be downtrend continuation, there can be many channels developing, and there can be many new extreme tested after new low being already in place. So when you see a day like this, you're not even thinking about failed second entry short. Even if there's a break in new extreme, don't think about failed second entry short so quickly. In order for you to think about buying, you will need to see some stronger established bullish trend and then start thinking about buying. Because when the downtrend is this strong and this substantial, there can be many smaller pushes to new extreme even after new extreme of the initial channel. So always lean more towards the bearish bias, because you need to see some proven uptrend first. Okay, the trend is holding. We can actually make it a little bit wider like this. We have a lower high, but the single bar is bad. Can we get some second entry short, first entry short, pullback, second entry short? We cannot. By the time I get a failed second entry long, it is too far down, so I cannot take. But you can see the key level is coming into play. The trend, I'm going to adjust it a little bit tighter so we can see something like this. Setting up here, confirmation here, and coming into play again. This is the place where the two-leg up pullback played out. First leg up, break, second leg up, break in extreme. Normally you like to see a lower high close to the second entry short, or failed second entry long quickly below EMA. Today we didn't get it. Now uptrend played out with the break new high. New extreme was formed, so the downtrend played out. So I'm gonna be pausing, looking to sell small break new extreme, but I'm not taking this failed second entry short because it is just, actually it didn't trigger, but it is just too early. Uptrend keeps working hard. I'm gonna redraw the short-term uptrend now, and notice what happened here. We are breaking below EMA and we didn't even bounce off the resistance. There is empty room. So this is a sign of stronger bearish bias. If you can't even reach the possible key level, you can see once again, it's not acting as a healthy trend range, okay? This is very similar scenario as we talked about earlier. This is not really acting as a healthy trend range because the resistance only has one confirmation And if you want to have more confirmations, you have to put it lower, you have to put it lower, so it's a good sign there's a bearish bias. The same thing with the support. We have lows here, so it keeps moving lower, it keeps moving lower. So it's not really a healthy trend range that you need to be too concerned with. The fact that you can't even reach the resistance and you're already below EMA, what are you expecting? A failed second entry long new high, first entry long, pullback, second entry long failure. Can we get a failed second entry long below EMA? We cannot. By the time we get it, it is too far down. So I want to see second entry short at the EMA. And we can't even get a second entry short at the EMA. We have a second entry short, but it's above EMA. Okay, and now we have a lower high confirmation setup of the second entry short. Now this is a decent setup. You don't have to be too worried about the support as we talked about. You're gonna break lower. The signal bar 4.25, you know, the ATR really increased. The market was volatile. There is no other way but to take setups like these because the signal bar is just gonna be big. This is a decent lower high confirmation of the second entry short. This downtrend needs to get new extreme. We played out with the break and the new low. I don't think we can sell just yet. We just have a break in extreme, and even the bigger channel played out. Market keeps trending higher here. I don't see any good setup. Breaking new high, and now it's getting pretty much way too late, and market is about to close. We had a lot of price action today, but the trend, the structure of the downtrend was a little bit odd, as you can see. Not typical healthy, consistent series of low highs and low lows, just spike down, pull back, long spike down. Not that many setups despite the amount of bars that we had, but overall decent price action. So you can see I'm gonna zoom back, a lot of price action. So hopefully you find at least a few setups today, and I hope you had a good trading day. But I'm gonna wrap it up. I'm gonna talk to you next time. Good luck with your trading.